Are you feeling overwhelmed by taxes, uncertain about your business finances, or worried about protecting what you already have built? Well, you're not alone, and there's a better way. I'm Ashley Freeman. I'm a tax and asset protection attorney, and this is Tax and Money Mastery, where faith meets financial wisdom. Each week, I'll show you how to legally reduce your taxes, manage your money with clarity, and protect your business and personal assets so that you can focus on what truly matters most: God, family, and career. Proverbs 10:22 says, "The blessing of the Lord makes one rich. He adds no sorrow." So grab your coffee and settle in. This is a podcast you can't afford to miss. Hi, welcome to Tax and Money Mastery. Today we're going to talk about Section 179 and bonus depreciation. What are they? How are they different from each other? How are they alike? And many more things. So let's dive right in. Section 179 and bonus depreciation allow a business to accelerate depreciation, meaning that you can deduct the cost of qualifying assets earlier rather than spreading the deduction over many years, which is normally how it would be done. So let's say you buy a piece of equipment. Let's go back to our cookie factory, my at-home cookie factory, and I buy a cookie dough plopping machine. My cookie dough plopping machine is pretty expensive. It's like $10,000. And normally, without bonus depreciation, without Section 179, I would have to depreciate that out over however many years that type of equipment is supposed to last, whether it's 5 years, 7 years, da-da-da-da. So both Section 179 and bonus depreciation allow business to accelerate the depreciation on things that are traditionally used in your business, such as equipment, machinery, furniture, certain vehicles, some qualified improvement property. So Section 179 is something that you would use more as a more targeted and controlled type thing. Section 179 will allow businesses to elect to expense qualifying assets immediately up to the annual limit. What that means is it's election based, so you choose how much to expense. The downside is that it's dollar limited, so you can't exceed the income from your business. So let's say my cookie making business made $5,000 this year, and I bought that cookie dough plopping machine for $10,000. If I use the Section 179 rule, I can only expense out $5,000 up to the amount that I made that year in my business. Section 179 won't let you go into the hole or create more of a loss than what your income was. It won't allow me to expense out the entire $10,000 because I only made $5,000. That's the limiting factor in Section 179. Before bonus depreciation was 100%, or like last year when bonus depreciation was only 40%, we were starting to use Section 179 in conjunction with bonus depreciation again. Now that we have bonus depreciation back and it's at 100%, you're not going to see very many people using Section 179 because everybody wants to expense it out, the entire thing, that year if possible. There's an annual deduction limit. It's $1 million plus. It's indexed annually. It goes up. We're still talking about the 179. The phase out begins once the total purchases exceeds that threshold. And you'll see that threshold if you look on certain returns that people file, certain business returns that people file. You'll see what that limit is on those returns. The best time to use this is when you want precise control over deductions. Your business would have steady profits. You want to avoid creating a loss. Sometimes you don't want to create a loss in a business because it looks worse for you if you're trying to borrow money for that business or something later on. You always got to keep that in mind. How's this going to look if I want to borrow money? Okay, bonus depreciation, allows businesses to deduct. So bonus depreciation doesn't have the limitations that Section 179 has. There is no income limitation with bonus depreciation. And you can create a loss. So back to my cookie making. So my cookie making business made $5,000 this year, and I bought the $10,000 cookie smushing whatever machine, and I want to deduct the $10,000 machine. I can do that with bonus depreciation. I could only do 5,000 of it with Section 179. See how much better bonus depreciation is? Bonus depreciation automatically applies unless you opt out of it. You have to opt out of it. Otherwise, it's going to automatically apply. There is no dollar cap like there is with the Section 179 with bonus depreciation. So let me try and give you like a side-by-side differences glance at Section 179 versus bonus depreciation. So Section 179, is there an annual dollar cap limit? Yes, there is. Bonus depreciation? No, there's not. Income limitation? Yes, with Section 179. No, with bonus depreciation. Can create a loss? Section 179? No, you cannot create a loss. Bonus depreciation? Yes, you can create a loss. We like that. Is it automatic? Section 179? No, you have to make that election. Bonus depreciation? Yes, it is automatic unless you opt out. Phase down risk for Section 179? It's pretty stable. It's been around forever. Bonus depreciation? It was declining. Currently, under the Big Beautiful Act, it's permanent. However, permanent in tax law basically means until the next administration gets in, and then it's subject to change. So it could change again where it goes back to a declining, or they could just totally cut it out when Trump leaves office. Let's hope not, because bonus depreciation is good for all of us investors out there. There are businesses that use both, and if the declining bonus depreciation comes back, then you may see the Section 179 again being used in conjunction with the bonus depreciation, since there's limits and stuff on Section 179. Section 179, generally, it does not apply to buildings. That's why we use bonus depreciation with cost segregation. That is when we can create a loss, and if you meet the criteria for either material participation with a short-term rental or rep status with a long-term rental, those losses can be used to offset your W-2 income. Bonus depreciation is a wealthy earner's best friend. For vehicles, right now, there's really no reason to use a Section 179 when bonus depreciation is at 100%. So the vehicles, that's a whole nother podcast on vehicles. Just to sum it up, Section 179 is best used when you want precision and predictability, and you have a good steady income, or when bonus depreciation is decreasing and you can't deduct 100% of your equipment or other expenses. Bonus depreciation is best when you want a maximum acceleration. It's going to give you the best cash flow because you're going to get to deduct that entire amount that year. All right, so that's pretty much it for Section 179 and bonus depreciation. I hope that helps clear those two things up for you, because I have clients ask all the time, well, with bonus depreciation and 179, can I deduct the entire vehicle or this or that? Like with 100% bonus depreciation, you don't need Section 179 usually. If this podcast has blessed you in some way or helped you, please feel free to share it with someone else that could use the help. And I hope you have a very happy and safe new year. God bless.